What's up, jewelers? Welcome back to the channel, Financial Jewels Investing. Thank you for your support. Remember, YouTube pays for engagement. Your engagement is free, just a little effort from your end. Hit the like button. Please subscribe to the channel and leave a comment. If this information is enhancing your community and you think it is important that everyday people like you and I learn how to invest our money, take control of our money, please hit that like button, hit the subscription button, and share this video with as many people in your contact list. My name is Mickey G. I'm an educator and an investor. I have a regular 9-to-5 just like you. My goal for this channel is to educate people on finances so you can build the confidence to take control of your money. You need to stop believing that the government has your best interest when it comes to money. Stop believing that these banks are giving you the best returns that they can give you. That is a lie. You have to take control of your own money. That is the only way you're going to build wealth for the next generation. You're building wealth for yourself, but you're also going to build wealth for the next generation. That is why today's topic is so important. War equal money. Yes, in today's video, I want to teach you how to make money during wartime. And why is this topic relevant? Well, duh, we're at war.
A short time ago, the United States military began major combat operations in Iran. Our objective is to defend the American people by eliminating imminent threats from the Iranian regime, a vicious group of very hard, terrible people.
So without any further delays, jewelers, let's go. War is terrible for everyone, and I do not find wartime funny or entertaining. However, I do live in a practical world. I know that during wartime, money is spent. My goal for today's video is to show you where is the money going so you can put your money there too. Regardless of whose side you're on, everyone is a loser when it comes to war. You and I are paying higher prices at the gas station. We're paying more for food. People are dying and trust is being broken. But in the midst of all of this, people are still making money. Investors are making money every single day, not simply because of the war, but because how everything is set up. During wartime, certain sectors in the stock market move faster than others. In today's video, we're going to talk about those sectors. I will cover 4 ETFs, 2 ETFs from each sector to help you start investing during wartime. When war breaks out, money usually flows into 3 areas. Area number 1, defense companies. Any company that makes military equipment or provide military services, you will see an uptick in revenue for those companies. They tend to get bigger government contracts. The next area that you will see an uptick in revenue is energy, meaning oil and gas companies. Any companies relating to oil and gas, you will see an increase in revenue during wartime. And last but not least, gold. I'm not going to talk about gold in this video. That's for a separate video. But typically during wartime, because of uncertainty about the dollar, people usually put their money in gold just as a safe haven. In this video, I will cover 4 ETFs where you can choose to park your money if you want to. Remember, investing has risk. You should not just trust a random person on YouTube telling you where to invest your money. I am not your financial advisor. I am an advisor, but not your financial advisor. So you should do your own research and check with your financial advisor to see how you should move, because it's your money and no one should control that for you. I will discuss 2 ETFs in the aerospace and defense sector. We will talk about their profile, their expense ratio, performance, and holdings. Then I will discuss two ETFs in the energy sector. Remember, that's the oil and gas sector. By the end of the video, you should have an idea of which ETF you want to invest in if you want to invest in anything during this wartime. Type in the comment box if you're ready to hear about these wartime ETFs. Type in the comment box, wartime ETFs, wartime ETFs. Let's go. The first ETF I want to cover is the iShares U.S. Aerospace and Defense ETF. The ticker symbol ITA. This ETF tracks the defense sector of the U.S. equity market. It spends at least 80% of its money towards these defense companies. Remember, ETFs are a basket of stocks, a basket of companies. So all of the companies in this ETF, ITA, they all are related to aerospace or defense. Aerospace, anything relating to satellite, anything relating to space, and defense companies are any companies dealing with military equipment, armored vehicles, or any companies that make weapons. Let's look at the expense ratio. The expense ratio, this is how much it costs you to invest in this ETF. It is 0.38% compared to the average expense ratio for other ETFs in this category, which is the defense category. That average is 0.64. So 0.38 for ITA and its category is 0.64%. That's considered pretty good compared to its category. But this ETF is considered a lot more expensive than your VU or your VTI. Typically, when an ETF is a more niche ETF, it focuses on a particular sector, is not as broad as your VTI or VU, it is going to be slightly more expensive. Now let's look at the holdings for this ETF. GE Aerospace is the number one company invested in this ETF. 21% of the funds that come to this ETF are invested in GE Aerospace. The next top company invested in this ETF is RTX Corporation at about 15%. So roughly 36% of the funds going into this ETF are invested in two companies, GE Aerospace and RTX Corporation. Next, we have the Boeing Company at 7.5%, and we have Lockheed Martin invested at 5.26%. Now let's take a look at the performance on this ETF. The YTD, that stands for year-to-date return. The year-to-date return for this ETF is 7.57%. Compared to the ETFs in its category, it is slightly lower. The ETFs in the category is at 13.99% return year to date, and the ITA is at 7.57%. Now, let's look at the 1 year return. The 1 year return of ITA is a whopping 52.34%. Guys, if you were investing in ITA a year ago, you would have made 52% of your money back. So if you invested $10,000, you would have made about $5,200. If you invested $100,000, you would have made $52,000 in just 1 year. In just 1 year. In 3 years, ITA has returned 29% compared to others in its category that are returning 21%. So as you can see, the past 3 years, ITA has consistently outperformed others in its category. Now let's look at the annual year total return history from 2007 all the way to 2025. It's clear to see that ITA have had some amazing years. So let's look at them. Let's go through these years. In 2025, ITA's annual return was 48.64%. That was last year in 2025. In 2024, ITA's return was 15.24%. 2023, 14.34%. 2019, ITA's return was 30.52%. In 2017, the return was 35%. In 2016, the return was 20.25%. Guys, you're not going to get these returns from your Bank of America savings account. Okay? You're not even going to get these returns from your high yield savings account. You have to get in the market in order to get these returns. Look at 2013. In 2013, ITA's return was 56.99%. We have to note that ITA had a bad year in 2008. Everyone had a bad year in 2008 at negative 38.64%. ITA also had a bad year in 2020 at negative 13.62%. So that is all the information that you need to start your research on ITA. Remember, do your own due diligence. If you're gaining some knowledge so far, hit that like button, the subscription button, and also leave a comment. Type wartime ETF ITA. If ITA is interesting to you so far, type wartime ETF ITA. The next ETF on the list is State Street SPDR Aerospace and Defense ETF XAR. That is the ticker symbol. So if you go to financeyahoo.com and you put in XAR, you will get all of the information that I am sharing with you right now. Let's look at the profile of this ETF XAR. Very similar to the profile of ITA. This ETF tracks the performance of the aerospace and defense Select Industry Index. 80%, at least 80% of the funds that are collected by this ETF are invested in these aerospace and defense companies. Let's look at the expense ratio. For this ETF, the expense ratio is slightly lower than ITA. ITA expense ratio was 0.38%. This ETF XAR expense ratio is 0.35%. The expense ratio of 0.35% means for every $100 that you invest in this ETF, every year you are spending 3 cents in expenses. XAR current price is $268 a share. Remember, do not allow the share price to intimidate you because you can always purchase fractional shares. Fractional shares is a piece of a share. So if you only have $20 to put towards these ETFs, that's perfectly fine. You can still get a piece of the pie. If you're not sure what fractional shares are, please watch some of my previous videos on the best ETF series, and I go in a little bit deeper about fractional shares. Let's take a look at the top 10 holdings for this ETF XAR. XAR, the ETF does not invest more than 10% in any companies. As you can see, its biggest holding is a company called ATI Incorporated, and the ETF only funds this company at 4.46%. Lockheed Martin is the second biggest investment in this ETF at 4.2%. This means 4%, about 4% of the funds that come into this ETF are invested into the company called Lockheed Martin. So if you look here, most of these companies, all of these top 10 holdings are under 5%, which tells me that if something were to go wrong with any one of these companies, you will still be in good shape. Compared to ITA, if something were to go wrong with GE Aerospace, you will get hit harder because over 20% of the funds selected by ITA ETF are invested into GE Aerospace, unlike the funds in this ETF. Now, here's my favorite part for all ETFs, the performance. I call this the show me the money section. Show me the money. The year to date return for XAR is a whopping 12%, 12.35% compared to its category of 13.99%. Slightly lower, but that's just a year-to-date return. Now let's look at the 1 year trailing return. If you look at the 1 year trailing return, it's at 67% compared to other ETFs. The average return of other ETFs in its category, that average is 44.44%. So 67% for XAR compared to 44% for the average of the other ETFs. That's the 1 year return. Now, let's take a look at the 3 year return. That is a more solid number. The 3 year return is at 35.32% compared to others in its category, the 21.34% return. So for 3 years on average, XAR, this ETF, has been returning roughly 35%. Now let's look at the returns by year since 2012. As you can see, in 2025, the return for XAR was 46%. So in just 2025, you received 46% increase on your investment in XAR. In 2024, your return was 23%. In 2023, your return again, 23%. 2022, you had a negative return at 5%. Guys, I will take a negative 5% return as long as I'm getting 3 consecutive years of 23 and 46% any day, because that will definitely average out to a positive return. And in 2019, some of XAR best years were in 2019 at 39% return. That's a positive 39% return, a positive 32% return in 2017, and a positive 61% return in 2013. Guys, do the math. Do the research yourself. It's right here on Yahoo Finance. If you are loving these returns and you are impressed with what XAR can do for your future earnings, type in the comment box, wartime XAR. Wartime XAR. If you are no longer Team ITA because you just saw XAR return, type wartime XAR. Jewelers, let me keep it 100 with you. This is not about celebrating war. This is about taking advantage of an opportunity that's already there. This is about understanding how money flows during certain times in an economy. And right now, we are at war, so the directions that the money is going is to the energy companies and the aerospace and defense company. You need to know how the markets are going to react and how the markets have reacted to this war. You need to make smart money moves. This is not the time for you to be fearful of what is going on. You need to educate yourself. So instead of listening to the news about every single missile that is being sent out without your control, you need to be watching videos like this so you can know where and how the money is moving. Now, let me say this. I'm not asking you to take every dollar that you have to put into these ETFs. That would be dumb, okay? Keep your money invested in VU or VTI. Remember to do your own research and your own due diligence. Don't just listen to me. But keep some money invested in VU and VTI. Take a small percentage, future income or money already stashed away. Take a small percentage of that and invest in one or all of these ETFs after you've done your own research. Jewelers, remember one thing. Broke people react to the news. Wealthy people position themselves before and during it. Which one are you? This is Financial Jewels Investing. We don't just watch the market, we move with the market. Join us.